Well, DeLynn, it's hard to believe 2019 is coming to an end.
I know, already.
But we have 2020 to look forward to, and we got some stats and numbers and some surprising things about the real estate market that even though sales may be up next year, the real estate commission may go down for you. Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us. And thank you for joining me.
Yay, you know.
Welcome back.
Thanks.
It seems like it's been forever.
Well, it's only been a couple weeks.
I know. It just seems like it's been
but
forever.
I appreciate it. Yeah, I've had little things going on. My son got married.
Yay.
I have a new daughter-in-law. So exciting things.
That is very
But
exciting.
I heard you had awesome co-hosts with you.
We did. So we have to do a big shout out to Gigi Evans. Thank you so much, Gigi, for filling in. She did a wonderful job from Dynamic Title, telling everyone about title issues and things like that, and kind of like the whole process of title. That was really good.
And then some panda came on the show.
We had
I'm like, what is he trying to steal my thunder? That's something I would do.
Goosehead Insurance, who I really felt should be renamed Panda Head Insurance.
Gotta love it. Gotta love it.
That's just me.
Here's one question, though. I haven't watched the show yet. I just saw the panda head. How did they introduce the show? Like, who did? Hello, everybody. This is Moving Forward TV. Did somebody do that?
I did that part.
Oh.
I did that part.
Well rehearsed.
And that's when I said, I really think we should change the name of the show to Panda Head Insurance instead
funny.
of Goosehead Insurance.
That's funny.
And Darian said that he was going to put it into the corporate to see what they thought about the idea.
We'll see how that flies.
Yeah, we'll have to see how that goes.
So, anyway,
but it's good to have you back.
Well, thanks. I'm glad to be back, everybody. And 2019 is soon to come
I
to an end.
cannot believe it. And everybody's been saying, they're like, oh my God, can you believe we're in November already?
I can't believe
we
it.
are winding down. I don't know where this year went.
It's crazy. And a lot of things happen in the real estate market that, were below projections,
right.
and some things were
I know, it's actually
above
kind of funny.
projection. Yeah, with interest rates, how many units moved, et cetera.
Right.
But you know what? We've got a little video clip from one of our good friends here that we're going to share with you right now to talk about that.
Was researching and reviewing 2019, the original forecast compared to how we're doing today, and I'm also researching what we believe 2020 will look like moving forward. So I started with the look back and pulled predictions and forecasts from both NAR and the Mortgage Bankers Association. Some of this is surprising, some's concerning, and some is actually positive and uplifting. Let me nerd out for a second and distill this all for you. So back in December of 2018, the MBA, who is really good at this by the way, forecast total mortgage originations to be $1.6 trillion. They also forecast mortgage rates to be around 5%. Realtors, the MBA, predicted $1.2 trillion in mortgage purchase volume. Obviously volume that involves you guys. Well, let's fast forward to today and see how we did.
Missed it by that much.
Well, wouldn't you know it, 2019 had different plans and blew all those predictions away. Total mortgage originations will probably finish around 1.9 trillion. LOs and lenders having record and banner years. You can thank the extra $254 billion gift that was the underpredicted volume for that. And we all know why that prediction was so far off, right? Yep, interest rates dropped much lower than almost everybody anticipated. Again, the MBA predicted 5% rates back in December of 2018. And they ended up around 4% and probably will finish around the high threes by the end of the year. Although purchase volume that involves realtors was basically right on. We should finish as predicted in the $1.2 trillion range. So awesome. Lenders were all handed a $254 billion gift to share, and all lenders had banner years. As my coach Bill Hart would say, so what? You were supposed to do that. What's next? Paraphrasing, of course, Coach. Good point, Coach. What is next for lenders and realtors? Well, I'll make a bold prediction today that some of you may not like, but need to hear. This goes for entire lending organizations, LOs, and realtors. Think of your 2019 volume in terms of transactions and total volume. Got it? You should be envisioning your total number of transactions and volume for 2019. Now, my bold prediction is this. It will take twice as much effort to close what you did in 2019 in 2020. If you close $16 billion as a company in 2019, it will be twice as hard to do that exact same number in 2020. Realtors and LOs, if you closed 100 transactions yourself in 2019, it will be twice as hard to do that in 2020. Now, why would you say that, Ryan? I'll dig into that in greater detail in my talk in November, but here's the short answer. There's good and there's bad news. I'll start with the good. The MBA is forecasting another good year in real estate and lending. Real estate transactions that need mortgages should be relatively similar to 2019 numbers, another $1.2 trillion worth of transactions. NAR's outlook is similar to the MBA and predicts similar numbers across the board. You can see existing housing starts, new home sales, home starts, single and multifamily numbers should all be similar to what we experienced in 2017, 2018, and 2019. By the way, all these charts will be available below, so you too can nerd out with all of your teams. But back to the charts and the good news. NAR believes that these numbers will even increase next year across the board, with increases in all categories. NAR and MBA even agree that rates should stay low next year, NAR predicting 3.6%, MBA predicting 3.9%. So what gives, Ryan? What's up with the bold prediction? Rates are supposed to stay low and housing will continue to plug away. Well, let me explain that before you get too mad. Lenders, I'll speak to you first. As I said earlier, we all received a $254 billion gift this year. That surprise production gift will not be there next year. Early forecasts show a reduction in overall volume to the tune of $200 billion. So the overall pie shrinks. There's more to unpack here, but I'll do that when I have more time. Again, come see us in November. Realtors, I need to wrap up the show, but my bold prediction goes for you guys as well. Yes, the numbers look good for you. Your pie isn't shrinking because your volume is shrinking like loan officers. Your pie is shrinking because you have so many new competitors. Business will be there for the taking in 2020, but you will certainly have to fight for it. And that honestly goes for everyone listening. It's not doom and gloom. It's just facts in an ever-changing, super competitive industry. What's important is how we prepare for this now. That's the takeaway today. Sure, all these numbers we shared are interesting and should be discussed with your teams, but the real meaningful conversation, if you're picking up what I'm laying down, is how are we going to pivot in 2020 to ensure our success as loan officers, realtors, and as companies? What tweaks and changes do we need to make now in 2019 so we are ready when 2020 comes? This is a discussion that should start now and continue for the rest of the year. The smart ones will make the necessary changes. The folks that concern me are the ones burying their head in the sand saying business as usual. Guys, I promise you, it is not business as usual. 2020 is almost here and it does not resemble yesteryear. And as I tell my son with everything in life and all the challenges he faces on a daily basis, figure it out. Figure it out. It can be done.
Okay.
All right. So what'd you think about that, DeLynn?
I thought, first, I love him. He's very, very good. I was really surprised. I remember when we were talking about at the end of last year, right around now, they were saying, oh my gosh, and 2019 interest rates are going to be over 5%, 5%. So we were all panicking, right? Right. There was a big flurry, everybody got to buy a house now, get it why the rates are, and then the complete opposite happened.
Yeah.
They dipped down as far as the 3s.
Yeah, and who would have thought we'd be there now when we thought we'd be over 5? And then even projections next year, if you remember for 2020, they were going to be over 6 by then.
Right. They were expecting them to keep on going up. Well, that definitely kind of blew it out of the water. And then the sales numbers and stuff, the volume and stuff, that was very surprising as well. Nobody was really expecting that either.
And you know what?
So we kind of missed that one, huh?
Yeah, we missed it. All the experts, we just go by their opinion. But you know what they say about opinions, right?
Yes.
They were like Camaros in the 70s. Everybody had one. Okay?
You're right.
It's true, though. You like that analogy?
Or an IROC Z. They had one or the other.
They did.
Or was that the 80s?
That was like the standard. So the one thing that's totally changing, though, for this coming year, even though the number of sales units and the volume for our real estate partners out there,
I thought that part was really interesting.
They have more competition. So if you don't pay attention to what we're about to tell you, even though you think, the number of units in the marketplace are going to be the same, you could actually make less money next year.
And not just the fact that, like we've been saying many times on the show before, there's so many more real estate agents now. That alone,
That 60,000 number in the
Right.
last 2 years in the state of Florida.
Okay, so that aside, a lot more competition. What about some of the other things that Ryan had mentioned as well? Some of the other the offer pads
Yes.
and the Open Door and the Redfin and the Zillow and the all of those other things that are coming in and coming after your commissions.
They are. They
basically.
are. They're becoming what we refer to as the iBuyers, because people are doing things online more.
Yes.
And people are doing their own research, and they almost feel like, I don't really need a real estate agent anymore. So
I know they all think that they can do it. We don't need that. We don't need that person, because sadly they think that all the realtors do is open up doors.
Yes.
They walk around with a whole bunch of keys and they're just waiting for your phone call to run up to that door and unlock it. No,
and there's more to it. But we want to take a quick peek at some of the different programs out there this week to see. Know what your competition is. Because
Right.
if you're not what we call a rock star agent right now, if you're just one of those, I do real estate,
Right.
I think you're going to need to stand out, because I think every year you're going to see more and more of these type companies that are cutting into your business showing up.
And even if you think that, I do a couple a month and I'm okay, right? I'm okay. I do a couple of houses a month and I'm okay. That couple of houses is going to get harder and harder to do because of the competition that's there. Not only the new agents, but these kinds of things that are really, they're starting to come on high. OfferPad is advertising on television all the time.
Yes.
So we wanted to kind of touch
So
base.
let's
I don't
talk
know if
about
let's talk
about OfferPad.
I don't know if you guys have done some research on that,
And
if you know
need
how
to
it works, but we did.
Yes, and I'm actually surprised, and I know people who've used the service, and I've gotten mixed reviews.
Right.
Why would people go to OfferPad versus using a traditional real estate agent? So
Right.
There's pros and cons in everything you do. So.
Before we even get into that too, I do want to say, if you are working with buyers or something, please tell them that they don't pay for you. So many times we get that, where we are encouraging people when you need to find a good agent, you need to get with an agent or whatever, and they're just looking up stuff online, looking up Zillow and everything. Their fear is that they have to pay you. So tell them up front they don't have to pay you.
And we'll talk about the competition for the buyer's agents after we talk about these listing companies, because we've got information on one of your biggest competitors right now called Redfin. But we'll get into that later. So
but let's go OfferPad.
Let's focus
You're
on
right.
OfferPad.
Okay. So basically what they do, iBuyer, so they are going to, OfferPad buys the house. You guys probably already know that. So they are cash buyers out there. So they're buying it for cash. One of the biggest questions, do they give you market value? No.
No, they don't give you market value.
No, they're here to make money.
They have to have a margin built into selling that house. So, of course, they're not going to give you full market value. They streamline the process of selling their home. They offer a very fast cash closing, which can be appealing to somebody maybe that has to relocate for their job.
Exactly.
And they just need a quick offer, because
Something really fast.
If you look at the statistics for this year, even though prices are going up, the time on the market is increasing right now. So the number of days homes are listed on the market are I don't know the average here lately, but I'm starting to see up in pushing 40 days on some of these listings now as an average overall.
Which used to be a lot less, so.
Yeah, so
As a cash buyer, they are able to close quickly. In some markets, they can close as little as 10 days, which is really, saying something. Huge benefit for homeowners whose priority is speedy. The OfferPad, typically what they charge is somewhere between 6 to 10%, and they call it a service fee instead of a commission of any kind.
So that claim to charge no commission is really kind of...
Yeah, exactly.
There's a service fee. It's not a commission. It's a service fee.
It's a little misleading.
Yes,
no, really?
yes.
And it is good to note right here that they are not in all markets just yet, but they are in our market.
They're in Florida, right here.
They're in Florida, and they're in the Tampa Bay and the Orlando area. I don't see Miami on the list yet, but they are definitely in our backyard. So basically, what is an iBuyer?
So an iBuyer is somebody that's going to go online and their
They
services.
are shopping there.
They do a market analysis online. They're going to send an inspector out to the home. They're going to look at the necessary repairs that may be needed, and they're either A, going to make you fix them before they close, or B, which most people opt for, they're going to deduct the cost of all those repairs in their purchase price. So they come up with a base price, which, mind you, we'll talk about how much below market that is. We'll give you that number because they need that margin.
Yep.
They're going to have their contractors fix it, deduct it, and then they're going to give you a final offer price. So sounds appealing, but if you need a lot of repairs,
Right, then that's cutting into things
sure.
on you.
And some of the things I've seen is, if the pool heater doesn't work, they're going to make you fix it, and that can be costly. Or if it needs floor covering or paint or any of those items, they're going to go ahead and whack it right off the top of that offer.
And keep in mind that their goal is to not only get the house from you, but then turn it quickly because they don't want to hold it. They are not landlords. They do not want to hold it. So consequently, they are going to look to turn it quickly. So what sells faster? A house that's painted. What sells faster? A house that's upgraded. What sells faster? A house that has great curb appeal, landscaping and things like that. So that list that they put together for the home seller to fix could be quite extensive, or like Barry said, it's all going to be, well, it's going to cost us this, it's going to cost us this, and they're going to subtract it off. So these people could be getting quite a low value. I did see on an appraisal recently that one of our files, OfferPad was listed in there as one of the sales, and there was a very good between what they bought it for and what they sold it for. There was like a $50,000 margin.
Right. So, all right. So some of you want to know what the difference is, and you can share this with your potential listing sellers. With OfferPad, they're actually going the national average. And this is on a survey, and it was done by MarketWatch. The average net sale proceeds from an iBuyer deal are about 11% less.
There you go.
So
they say 6 to 10, and it's 11%.
It's 11%. That's their fee because they're lowballing the price. But again, and it's definitely going to be lower. They have to.
Right. I mean,
They're
in the business to make money. We get that. So real quick, the pros and cons and everything. Obviously, the pros. I'll do the pros. You do the cons.
Sure.
The pros. Flexible closing date. OfferPad isn't moving into the house, so they can be flexible with the sellers as long as it's within 50 miles of their current home. They even allow the sellers, if they need, after they close on the house, if they need an extra few days or so, to get everything out, they are very flexible with that as well.
And then
cons?
The cons, well, we'd like to say for you guys, there's more cons than pros. So,
yes. And there are in this case.
Yeah. So the biggest con to me would be the service fee between the 6 and 10%. They actually, if it's 6 to 10%, obviously the typical real estate commission sales price is 6%.
6%.
So,
and sometimes negotiated lower.
So sometimes most of their process though is about 7% is what they're saying. So
there you go.
So you can net less
Not much of a
because
big
they're going to give you a
difference.
lowball offer.
Yep.
The other con is the inspection. So they expect you to credit immediately on the inspections of the needed repairs right away. And then they have limitations, too, on which homes they're going to buy.
I know. This is the one that was really surprising to me. So listen to this one.
Different markets are, they're not going to go over 500,000 to 600,000 in certain markets.
There you go.
Imagine the higher price states.
Under $500,000.
And the property cannot be more than 1 acre. So if it's more than an acre, OfferPad's out.
So there you go. So some of the more rural areas, or even where my house is, not going to work. And then the other one that I thought was interesting, nothing older than 1960.
Yeah, so if your home is built 1960,
58, nope, you're out.
They're not your people. And the other things they do are, and a lot of you offer this too, is they'll do a free moving service. They'll actually let you extend your stay for additional 3 days. But that's all part of the negotiation. So even though you close, you might need extra time to move out. And they have flexible closing dates. So, that's one of the things. So,
However, it should be noted that if you do need those extra few days or whatever, they're going to withhold like $3,000
of that money.
of your seller's proceeds until they actually do get out.
So on your part being a pro that they buy it quickly, in my opinion, and back to the 70s with those Camaros, a good real estate agent that's a rock star real estate agent is going to have connections in the community.
Right.
He's going to spread the word. He's going to have investors, can probably sell your home just as quick and get you more money.
Right.
And I know you all want to hear that, and you need to sell that to your potential listers.
That's exactly what you need to sell.
If you're connected in this community and working hard, you're going to beat out OfferPad. Bottom line. And you should.
OfferPad, and so for what it's worth, OfferPad, Zillow, Open Door.
So yeah, let's talk about
Perch
that one.
or whatever.
So we talked about OfferPad. Now,
They all work the same way.
Open Door is a little different, but
Not much.
No,
The
not-
big difference is this one that we want to get to.
so OfferPad, you go online and you'll actually put your information in. Then you'll receive an offer back within 24 hours. That's the way they do it. And again, once you get that offer, then repairs are deducted after.
Right.
So similar process. Zillow does it about the same way. Neither one of these are going to pay you full market price.
Right.
And if you understand that, you'll get it. If you want less, a quick move, maybe you look at these options. But again, a rock star agent may be your best bet. So check your agents out, your reviews.
Bringing us up to the difference between Redfin and a full-service kick-ass agent.
Right. So Redfin is another one of your big competitors out
Right.
there.
But they're a lot different than OfferPad and Open Door and Zillow. They work a lot differently. So we wanted to kind of touch on that one too.
They are on the buyer side. So your
Right.
competition we just talked about was on the seller side. Now we're going to talk about the buyer side. Redfin, actually what they do is people go online, do their research, find the home they want. They set up an appointment with a Redfin agent that meets them there. And
Did you notice they go online, they do their research, they check things out. So they're doing, the buyer, most of the work.
Yes, and and they give you a rebate back on a scale of the commission. That's what's attracting people to Redfin. And I know some agents offer some kind of credits, I've seen it, but they pay their agents a flat fee. That's how Redfin works. So I don't want to say, Redfin agents are paid less. It's a flat fee. They don't get
Flat
the
fee.
3% commission.
So the way they sell it is, most realtors, 6% split between the buyer's agent and the seller's agent. They take that buyer's agent's fee, and half of that on a sliding scale goes back to the buyer.
Right, so you could receive a good chunk of money. Now, here's the downside. That Redfin agent is not going to be hands-on like a real estate professional.
They're
okay?
not making the full 3%.
Right. And they're not going to know that particular neighborhood. Maybe they're not a professional in that area where your personalized agent may be, okay? Now, Redfin is not going to ever make you sign a buyer's agreement.
Right.
Where many of you have your buyers do that. So people like that. So your competition is not asking them to do that. And I know, you guys work hard. You show 20 houses, and then all of a sudden they go to another agent.
Yeah.
So that can happen. I get it.
Obviously the advantages that somebody has of Redfin, like I said, it's they could put the biggest one. They could potentially get some money back, but they're doing a lot of the work. So if you have somebody who doesn't mind doing a lot of the work and is working on doing all the stuff, the agent is clearly doing a lot less because they're getting paid a lot less. So my personal opinion, and again, like he said, Camaros, everybody has an opinion. I would rather, pay somebody to do what they do best. I don't want to do all of the work because I'm afraid I'm going to miss something. And there's so much in real estate, and that's what people need to understand. They think that, I can go online and I can do this and whatever. They can't. You could miss something. This is a legal binding contract, and people don't realize that, right?
Well, many agents, before they go out and show a house, are going to do their due diligence, figure out what's in the house, what's included, not included.
Right.
Where a Redfin agent is not going to know to mark that those speakers come with it that are hanging in the corner.
Exactly.
They didn't know they were even there.
Right.
The ceiling fans, certain appliance, that's not their role, okay?
Yeah.
That's going to be your role.
And that's why it could get into some sticky things.
Yes, yes. So
that's what people really. So the biggest, what they say, the biggest difference between the two comes down to Redfin pays you to do more of the work, or pays them to do more of the work, and gives some tools as well. A rock solid full service agent every single time will absolutely blow away Redfin.
yes, and sorry, Redfin.
Sorry, Redfin, but that's just the bottom line.
You know, people,
they said it.
People want to save money. People are looking to.
And they think it's easy. They think they can do it. They think they can do anything
if you're a
online.
first-time
They can
home
get
buyer,
a mortgage online
if you're a
too.
first-time
with
home
nothing.
buyer, please don't go to these services. I'm just saying.
You've got to use an agent.
Yeah.
They are so worth their weight in gold.
Yeah. So, but I think the complaint is that some agents are not full service. They're just getting
And
by.
that happens too. So make
So
sure you do
maybe-
your research. Find a good agent. Look up reviews and things like that. Find yourself a good agent. I love reading reviews. We all do it for hotels, right? We do it for movies. What movie do we want to go
Check
see?
out-
We always read the reviews.
And make sure
Read reviews.
make sure your clients leave a review for you, because
Yeah.
people are going to look at that. I know you get positive reviews all the time, so I love
do.
seeing that.
I know.
You're good. You're good. All right, so let's talk about what's going on in the community, because we got to wrap up. This is a lot of
I
information.
know. So our favorite charity of choice, WPBA, West Pasco Business Association, and what they have going on. December 5th.
December
dun,
5th.
Dun. One of
Dun,
my
dun,
favorite
dun.
favorite things. December's a good month. I like this one. So we have a lightning game, lightning bus trip. There are probably only a few seats left, so definitely go on WPBA.biz or WPBA.rocks and sign up. The tickets usually go fast for that. It's a lot of fun.
Always a sellout.
We have appetizers, always a sellout. Bus trip all the way to the Amalie Arena.
Beverages on
Watch
the bus,
the game.
snacks.
Right, and then a trip back as well. So that's always good.
It really should be a great time as usual. And then, of course,
Next.
with the next event for WPBA is December 13th, How the Grinch Saved Christmas. Supports local families in need right here in the community. And applications are coming in, nominations right now.
For people
if you
who
know
are in
somebody
need.
who needs help during the holidays, maybe down and out, that we can reach out to and make a difference to.
Yeah.
let
And if you'd
us
like
know.
to be a part of it, we are still accepting sponsorship opportunities. If you want to donate a basket with your name on it, your card, a bottle of wine, a gift card for a restaurant or something, we're taking we are begging for any and all donations.
Absolutely.
It can raise
Never-
money, as much money as we can for these families who are in need.
And now on to the mortgage firm side.
Yes.
So we have our next Lunch and Learn for December 10th at Carrabba's. It's actually beyond FERPTA. So all of you have been
FERPTA.
asking about that. You need to learn about it, because you're going to get CE credits just for doing this
That's
one.
right. So this one is another CE credit. Now
11:30 at Carrabba's.
Let us know, because as you know, this one, just like the last time we had certificates, a lot of people come. So
It's going to be huge.
It's going to
So,
be huge.
Hey, like our page, share this, forward it. I don't care how you found us. Find us again. Tell your friends about us. We love you guys.
We love you. Thanks so much for watching. We are Today and Every Day.
Moving forward.
See you next week.
Have a great week, everybody.